Everyone, I'd like to call to order the Assembly Budget Finance Committee meeting. And I'd like to start with introductions on this side of the room, please.
Internal Audit, Mike Chadwick.
Lance Wilbur, Office of Management and Budget.
Robert Harris, CFO.
Dan Moore, Treasury.
Pete Peterson, Assembly.
Patrick Flynn.
Eric Croft. Tim Steele.
Forrest Dunbar.
Elsie Bridget.
Dick Tracy.
And the audience, please.
We're walking around. Suzanne, please bring it.
Council Ball, Anchorage Fire. Dave Swanner, Anchorage Fire.
And in the audience, please. Thank you. Thank you. And then this gentleman with the red tie. Thank you. Okay, MOA financial status. Mr. Harris, you have the floor.
Thank you, Madam Chair. We have a report today from Mr. Moore, Treasurer, and also from Lance Wilbur. The city finances seem to be in good order.
Thank you. Mr. Moore?
Okay, so I'll speak first on the revenue status, and you're actually going to get the report, the monthly report we give you at your next meeting, which will be on the 20th of December. And a lot has happened since we last reported to you, and at the last time, the number, the sort of bottom line number was about $4.2 million of a negative revenue variance, meaning we missed revenues, or we're projecting to miss revenues by $4.2 million. That number is now $6.8 million. So the amount of negative revenue variance has grown by about 2.6 million, which is a lot in the last 4 to 6 weeks. Most of that is really attributable to investments. Since the presidential election, there was a significant change in the investment market, especially on the fixed income side. There is an anticipation of a lot more spending and potential inflation going into the future. And as a result of that, the markets responded very, very dramatically. So through the end of November, the fixed income markets had come down 2% in 1 month, which is a lot. Since then, I just was in an investment meeting just a few minutes ago. Year to date, or I guess quarter to date, so throughout the fourth quarter, the fixed income market now is down 3.5%. So, and of course, yesterday there was a Fed announcement of a rate increase, which was already built into the numbers, the expectations. However, they also talked about more rate increases in the future. So it is a negative hit at the current time. It'll actually turn into something positive as we get into 2017. The issue here is that we only have 2 or 3 more weeks left in this calendar year, and the chances of the investments sort of coming back or recovering in the next 2 or 3 weeks the chances of that are low. So we do have to market our investments every month and at year end. It's a very formal process. And so 2/3 of this decline in our revenues is investment related. Most of that is paper unrealized loss, which is good. I think 1/3 of it was actual realized losses. We do have actively traded investments, so when they have to start moving their investments, you're going to realize some losses along the way. So that was the bulk of it. That's 2/3 of it. The other reason for the change is 2 other areas. One is in tourism. Tourism tax, and this is really room tax, was negative for the third quarter. The third quarter is by far the biggest quarter, and we believe that is primarily due to competitive pricing, especially with newer hotels. We think that could be a lingering effect going into the future, and so that's something to consider. There is also the possibility some of that is lower prices for the newer hotels just to try to drum up some business. But there is definitely more hotels out there. There's more choices, and with more competition, the price comes down. So that affected the revenues there. The actual beds rented, taxable room rents, the volume of that is fairly stable. It's really in the pricing that we've seen the most change. I think there was a cruise ship aspect too that also affected things, but it was mostly pricing. The third and final area that had a negative effect over the last month or so was in Fund 181. Their projected revenues are down an additional $380,000. So their projected variance for the year is this is for 181, is about $1.4 million off of their budget, their revenue budget. And for room tax in total will be about $600,000 short of what general government has budgeted for room tax. Tobacco tax, we continue to assume it's going to meet budget. That there is possibility of an upside there. We've seen a strong temporary trend. So that could be a timing issue, kind of like investments. So in some ways, investments may hurt us timing-wise because we're so close to the end of the year. Tobacco, if it stays strong, could end up being, a little bit up above budget. However, it's going to reverse itself in the early part of next year. So it's a timing issue. The others we have are the trend and the projections are very stable from what we've said before. So it's really investments. We knew that could be a big factor, and it was bigger than we even anticipated. I mean, it was quite a swing. And then room tax, we knew from second quarter that there was some downward pressure, and it was actually a little bit more downward pressure in third quarter. So overall, $6.8 million under the revenue budget. That includes investments and Fund 181. And this report and further details will come to you at your next meeting on Tuesday.
Madam Chair, can I ask?
Certainly, Mr. Moore.
On the investments, I understand how interest rates and some of the other, going up and some of the other things would affect fixed income investments. But we're mainly, aren't we, correct me if I'm wrong, we let those go to maturity. That is, we're not speculators on them. We don't really care their market value. We're taking them to maturity.
That used to be the way the city invested a number of years ago, but there was a change in the model, I think it was 2007, and we, the city, made a decision to more actively trade. So instead of the buy and hold type of approach, which really wouldn't matter because you just hold to maturity and you get what you expected, we are actively trading every day. And so there's going to be wins and losses every day. And in this case, the actual realized loss was $500,000 since we last reported to you. But the unrealized loss since we last reported was $1.2 million. So most of it, 2/3 of it is unrealized. It's kind of like what you're saying. It's we're not stuck with that unrealized loss, and it should work itself out to a large degree. But we have to be patient, and it's going to be sometime in 2017.
And is it mainly fixed income or all fixed income? Any equity in it?
It's all fixed income. Yeah, equity markets on the MOE trust fund side doing quite well. So even like small cap investments, which is an equity investment, was up like during the same period that fixed income was down 2%. Small cap was up 13%.
So how much liquidity do we have on those? That is, how much is it a short term or a long term?
For our cash pool investments, there's a lot of liquidity there. And Robert can probably see, there's like 3 different buckets. And the first bucket is the most liquid. It's very short, less than a year type investments, easily liquidated without incurring a lot of losses. Then you have a medium term, a little bit more risk, and the longer term has the most risk, the most diversification. And the investment strategy was changed, I think, in October in that longer term bucket to add in some additional potential return through high yield investments. So
Even in that third bucket, do we go to any equity in that least?
not currently, no. But high yield has some characteristics that are similar to equity.
Okay, thank you, Madam Chair.
Thank you, Mr. Croft. Did you want to respond to that?
No, I think Dan just answered that. Yes, all of our municipal cash fund money is in fixed income. The principal driver there being security and liquidity and availability, and probably the least the factor that we would consider to be return. We want to know that the money's there when we need it.
Thank you, Mr. Harris. Mr. Trainee?
Then question for you on marijuana. That product's been sold since the last 13 minutes ago in Anchorage. So how often do they have to report what their in taxes tax?
Yeah, it's a
Quarterly, monthly,
it's a
or-
monthly return, and so it's 30 days after the end of each month. So it won't be till late January that we receive our first return.
Okay, thank you, sir.
Thank you, Mr. Trainee. Mr. Flynn?
Yeah, I'll note that according to the report, we're still expecting $100,000 in marijuana tax money, so it's not all.
we did bring that revenue projection down another $150,000. We're virtually to zero. Not quite, but it started out at 700,000 and there's hardly any left. And I understand what you're saying. Unless there's a great New Year's Eve party or something, I don't know if we're going to get that.
I'm pretty sure I warned that would happen, but,
You're pretty long line.
Yeah.
So, Dan, given these, we'll call it downward pressure in room tax revenues and 181, how are we reflecting that in our projections for 17 thus far? Because I seem to recall we were not expecting significant decreases in either of those going forward.
I can say for room tax, we initially projected for 2017, this would have been probably in August, that we would have a fairly normal continuation, maybe 2 or 3% growth. Knowing what we know for 2016, we would recommend revising that downward. And usually, I think in early March is when we give our most current update to OMB. So in the first quarter, we will be recommending some type of a decrease in room tax. For Fund 181, that we don't actually directly weigh in on, but I'm sure OMB will be talking to the department and asking what their projections are there.
Yeah, it'd be useful to get, I guess, an update on where, this one's struggled to maintain its been in the red basically for years. So where are we on the recovery spectrum, and given this latest downturn, how much longer is it going to take to get that one back in line? Thank you. That's all, Madam Chair. Thank you.
Mr. Flynn, I have a quick question, Mr. Moore. So the ball's been going through the roof. So how does that affect our investments?
Are you talking about cash flow investments or other types of investments?
I'm talking about the Bell Industrial Act. I mean, it's like almost 20,000 now.
Right. So for investments where they're invested in equities or stocks, we're definitely getting a big boost from that. So I think the fund, the investment, like the pre-funding investment, which I was just in the meeting a few minutes ago, for the year, the return on that is probably going to be about 7.5%, which is a good year. The actuarial assumed rate of return for that particular fund was 6.9%. So because of that strong growth in equity, we're likely in a lot of these major funds to exceed the normal annual expected return. It's not going to exceed it by a lot, but considering the last couple of years where it's been really tough to have much of any return, it's a good year.
Thank you. Anything else?
I was going to just give you also just one other piece of information here, if I can find it real fast. So room tax as a percentage is down 4%, if you wanted to know the percentage. And then the other one that we occasionally have updated you on is the number of traffic fines, and that was, the issuance of traffic fines was up 9% this year versus last year. So the number of traffic citations is up. Okay, and that's it.
Thank you. Mr.
Oh, and I do have one more. Thank you. There is a provision in municipal code where it talks about if the revenue variance ends up being 1% or more compared to the approved operating budget. And we actually just broke that threshold just in this recent update. So when you see the AIM that you'll see next Tuesday, there's going to be some added verbiage in there saying this serves as your notification that we have, in accordance with the code, we have notified you we've exceeded the 1% variance. And so that was something that we've never actually had to do since that rule came into effect. And so this is the first time. So,
Thank you. Mr. Rivers.
Thank you, Madam Chair. On your meeting on the 20th, you will receive our October monthly expenditure report, and at that time, we were about 83% through the year, and we were 81% spent. Our non-labor was a little bit less, and our on our labor, but as far as expenditures, we are under, given where we were in that year. And based on the information that we learned from Treasury just recently, we looked to see how November might be turning out, though you won't have that report. At the end of November, all of the expenses, so the actuals were in on the 8th or the 9th of December, so we are still under budget. At that point in time, we were 91.5% through the year, and we're about 88% spent. As Dan mentioned, since this information is so late in the year, we're really working with departments to curb their expenditures, knowing that the revenues are down. It's really difficult to do because we've actually made encumbrances, and so we've already made those commitments, and that 88% included the encumbrances. So knowing that, we've also been looking at sort of how we're going to end out the end of the year, and based on the information and based on the reports here, we've asked departments to give us some projections, and based on that, overall, we will still be under budget. I think the amount will probably be somewhere between $2 and $3 million. We really won't know until the year end closes. We do have a couple departments that will likely be over their overall budget, but as a collective group in general government, we are going to be under, based on the projections that we have to date. So we are working with those departments to figure out what we can do to modify that and figure out what we can do to make sure that they're taking every opportunity to charge to a grant or charge to a project, and whether or not they should be charging to the operating budget. So on the expenditure side, we are doing well. We are very close to the end of the year. I do expect that we will have a little bit of fund balance based on the budget that we have, but it's, as Dan reported, that without those revenues, we may need to adjust even further. So as the year closes, as we go into January, we'll know a lot more how all the departments are doing, but right now, the departments are doing very well overall, and those departments that look like they might be over a little bit will be having to come to the assembly in January with some adjustments, so, and just be aware of those things. But I think that's pretty much the highlights, and if you have any particular questions, when you see in your October report, many departments in the report are underspent, and it just happens to be where they are right now, but collectively, I think we're looking pretty good to the end of the year so far.
Thank you. Mr. Dunbar?
Thank you, Madam Chair. I think you've answered this question, but I just kind of want to get a little more detail, sort of marrying the two reports we just got here. So I'm still, in my mind, trying to, understand how our budgeting works exactly with so we're under with revenues. Does that create a hole in our budget that month, or that fiscal year, or the next month, or the next calendar year? See, I'm trying to understand that exactly. So I think what you're saying is we're trying to control spending the next couple of months. Is that right?
Couple of weeks.
Couple of weeks.
Yeah.
And so it really is like a calendar year, and this revenue is going to be up until January 1st. Is that right? And if we can't, for some reason, plug part of that hole, is the idea to use fund balance? I mean, is that something that we were discussing as well?
Yeah, we would. I mean, that might be one option, but remember Dunbar, as Dan mentioned it for the tobacco. If the tobacco comes in before December 1, it's going to help us a lot. If it comes in on January 3rd, it will help us in 17. We can't take those revenues and offset because we're on that year. So that's why the expenditures that we know, after December 31st, we're still paying bills in December. We're using 16 money to pay them. When that all gets done, then we know what we have, and we know where we are for labor and non-labor. Does that make sense? That's why, if there are any significant adjustments, and we know that we may need to use fund balance or some other appropriation from another source, we'll bring those to the assembly in January typically, sometimes in early February. And then we get all of that set before we start going into the first quarter of 2017, if we want to make some adjustments, as Assemblymember Flynn mentioned, 181 or whatever it might be.
And so the money will have been spent, and so I guess we can't go back in time and save money, right, that we've already spent. So other than fund balance, what other tools do we have if we sort of miss our target?
There's very little options. One is, there might be some opportunities in grants where you can actually charge an effort. They're going to be very small. They're not going to be in the millions of dollars. It'll be tens of thousands here and there. we'll look at everything that we possibly can do to make sure that we're taking whatever eligible costs can be charged to a grant, and those that can't have to be charged to the area-wide property taxes, then we'll have to show it that way.
How much fund balance do we have? How much do we think we'll have come January 1st?
So, based on the budget right now, we're still gonna have some carryover from 2015, that's roughly around 4 million. How 16 ends, that 2 to 3 million, that will be in addition to that. So the total amount of fund balance moving into 17 could be $5 to $6 million.
But it sounds like the gap in revenue might equal about what we thought we were gonna get in fund balance in 2016, is that right?
It could be.
Thank you, Mr. Dunbar. Before we move on, for the record, is there anybody on the phone? No? Okay. Mr. Trainee?
Once you mentioned when you first started that we have a couple departments that are over.
Right.
Which departments?
So the ones that I'm keeping an eye on are finance, and the reason finance is that I want to make sure that they're charging all of their eligible costs to the SAP project. And I think they're doing a really good job at that. It just may be a matter of journal entries not in time based on when we looked at it. So, that could probably be around 250 or 300. And then the fire department, I know that we've been working with the chief, and they've got some overtime challenges that they've been working on. So, that number could be anywhere between 1 to 1.5. I don't know yet. So we've been working with them very hard to make sure they too are taking opportunities. As you can see on the assembly, you'll see a request to appropriate money from the sockeye, fire, a variety of everything we can do to move those expenses from where they charge to the general back to a grant. Then that lowers that amount. So
Thank you on that.
Okay.
Thank you, Mr. Trainee. Anything else, Mr. Wilbur?
No, thank you, Madam Chair.
Thank you. But report from the Budget Advisory Commission, I don't see Ms. Nelson here, so we'll go past that. We're now at the agenda, the SAP progress report, Mr. Farron.
Thank you, Madam Chair.
For the record, Mr. Weddleton has joined us. Thank you, Mr. Weddleton.
Okay, thank you, Madam Chair. What I've included here today is the normal report that I give at this particular point in time, and I'm going to give a fair amount of additional commentary along with that. So what we have prepared here first is our normal section that talks about the realization phase plan. And the first thing that I want you all to look at is that everything's pretty much red. And why is it red, and why do we have this here? Prior to the Thanksgiving break, when I was up here, we were talking about how we were having some challenges with regards to meeting the end of our realization phase. We didn't know what the impact was going to be at that point in time. We were going to be working through the Thanksgiving break to try to figure out and determine what that impact was going to be. So we're actually in that particular situation right now. So we had hoped to finish the realization phase and begin the first phase of testing on November 28th. That did not occur. We have, for a variety of reasons, which I'll get into, through the last couple of weeks. The new date that we are shooting for is December 23rd, which is actually a week from tomorrow. But because even that date is a challenge for us, we've actually not gone back and what they call baselined our project plan. So we have not added the extra weeks to the plan because we want to be assured that we're going to be able to finish realization. As a result of that, all the dates, and that's why we've made it red, because it's all based upon the fact that we had planned on being done with this phase as of the 28th of November. So we didn't want to make it green all of a sudden because we've added some weeks with some challenges we have with the schedule. So I left it the way it is to show everybody we missed our November 28th date. And as a result of that, the project has been red over the last several weeks as we go into this. The new date that we're shooting for is next Friday, as I mentioned, and I'll get into that. But that's the reason why you see all red, is we just haven't changed the project plan to reflect any new date that we might have out there. At this point in time, through the third quarter, the municipal labor is just under 900,000 of the 4 million that was allocated. That's on what would be the fifth page there. So we do have 2 third quarter allocated in there, and when we get into January, we will look and see what happens for the fourth quarter to be able to book that. I know from a budgeting perspective, there's a number of about 1.4 million, and I believe you heard Mr. Wilbur talk about the fact that in some areas we're trying to make sure that the items that are SAP related are charged to the SAP capital project and not the operating. So we do go through that particular process. The schedule on the bottom of that one is as I mentioned, we've left it the same. So you can see that our realization phase and build was supposed to be done, and by basically the Thanksgiving break. So you can see the line has moved beyond that, and we did not meet the 28th of November as planned. So a new schedule has been prepared. We are having some challenges to get to the 23rd, which is next Friday. So I have actually not released or put out a new schedule for us to look until I get a comfort factor that we're going to make next Friday. Otherwise, we just continue to keep changing and so forth as we've gone through. I've spoken several times about the intent of the administration and myself that we want to be very confident as we move from phase to phase based upon the history of this project, that we are ready to move and we're not trying to hit a date and then have a variety of different issues that may come up. So we're seeing a conservative approach, I think, to our schedule and to our progress with this report to make sure that we are comfortable as we move through.
Mr. Trainer?
Sorry, Alden. How big of a problem is the bad data you got from Black and Beach hammered what you guys are doing? Because you guys anticipated the data being ready to go, and if you understand it's not. And because the last administration settled out of court, we can't go back after Black and Beach.
That is a true statement, Mr. Trainer. I would alter your statement just a little bit. One of the 3 areas that we have problems with, and I'll get into the detail, we've been having problems with data, as you're correct, with Philo's test cases, and then the 3rd area was in our development of the objects. Where you are correct with your statement is the fact that many of the developed objects by the prior system implementers, Black and Beach, for example, the expectation going into this contract was that much of that work could be used, was already created and was in good shape. And what has happened as we've gone through and dove through the development and more detail of this, a lot of it was just not useful. And what that has caused is, one, our struggles to hit our deadlines, because more work has had to be done than what was anticipated, and we've seen a lagging of being able to do that. So yes, it wasn't necessarily data that I would blame. Data is a critical component with that. That's a lot of the municipal responsibility of that. But many of the development of the system that was already configured and the documentation that went along with that has taken us a lot longer to put into good shape based upon what we found out after we got into it.
And there's nothing we can do to go back to Black and Beach because the last administration settled that out of court.
I believe that's a correct statement. The mayor as well as purchasing have asked about those, and that's what I have been able to do.
Thank you, sir.
Thank you, Mr. Trainer. Mr. Middleton?
Could you define realization? What does that mean?
So realization, there's 4 stages of our project, and we're in the 2nd stage right now, which is basically the build phase. The realization, we're basically building the house, configuring our system. So when we refer to realization, we're talking about how do we go from a design or blueprint, which is our first phase, to our go live portion. So blueprint, realization is the development of the system, and then we're going into the testing phase of the system here very shortly.
Good, thank you.
Thank you, Mr. Middleton. Mr. Steele?
Yeah, I was just following to what Mr. Trainee brought up in terms of being able to go back on some of these folks. Is there any notice that we can give before the end of the year to release to go back to?
With regards to Black and Beach?
Yeah, or any of them
I
that when we
literally
get
think-
into the data, we find out it's not going to work.
I believe what I have been told by purchasing is Black and Beach and anything that had to do with Peloton in the past is kind of in the past, and we are not able to do anything on that. we are actively engaged, the mayor and SAP, on things that are relevant to this current contract. And there are certainly many things that we are currently doing to deal with the cost that we're incurring right now, and I'll actually talk a little bit more about that here soon. But the Black and Beach is, what I've been told is we're limited, and basically our option is, there is no option to go back and do anything for that money.
Yeah, if we need to protect rates even in the existing contracts, then we need to do that too.
We have lots of ongoing discussions currently with us.
Thank you, Mr. Steele. Please continue, Mr. Dean.
Okay, so the last page is kind of a new one. We haven't done this. We took a couple slides out that we had been showing, and we wanted to focus on what's currently occurring out there. And as I mentioned, our three areas that have caused the most recent lag is data, development of our objects, and then the finance logistic department getting their test case scenarios ready for the testing round as it's coming up. So the top slide there, as of today, we have 206 objects in this system. Remember, we have 19 modules, and being able to do that, do a variety of things. As of this morning, only 112 of those are ready to go into our testing phase, which that means roughly 95 are not ready. And those 95, as you can see, 63 of those are currently in what's called the defect mode, which means the consultants have been working on these things, and it goes back and forth between the consultant and the developer, and they're testing to make it right. And so they're currently being worked with the development and back and forth, but they have not fixed all the bugs, so to speak, that are in the system. So those are actively being worked. And then 22 of those are currently where the consultants have them in their hands. They have not identified that there is a bug, which means that it's either everything's going well as they're trying to get through their round of testing, or they actually haven't gotten to it yet to determine where that is currently at. Those 85 are the ones that are our focus between now and next Friday to try to move into that higher category. The other 9 that are there, those are ones that are still in development. They're all supposed to be developed by tomorrow. But the chance of them going through all the rounds of testing and everything to be able to get those in are pretty slim to be able to do this. In most cases, we would be shooting for probably 90 to 95% of these objects ready to go into SIT1 testing. It's very uncommon to ever have all of them. So I'm not super concerned about those 9 maybe being left out, as long as they're being worked on. But we have a lot of work that that they need to be doing over the next week. They're working this weekend. They're working nights. We're on now if you remember, to save money early in this project, we used global resources to do the development. So we're now on Bangalore, India's time frame to be able to help with the communication. That's where the developers are at. So we're doing everything we can to get there. However, I do have some concerns. As you can see, the last 6 days here, there hasn't been a lot of progress. So that's one main reason why I haven't put out new schedules. I haven't re-baselined. I want to make sure before we go into the next testing or the testing phase that we're ready. This is the one area that I have the greatest concern, and that's why we're kind of monitoring it on a daily basis.
Mr. Dunbar?
Yeah, and I know this number changes pretty, it's pretty volatile, but what approximately is our average daily burn rate?
Well, I don't know about daily, but weekly, because we are full bore with all the employees that they've brought on. We have about 100 employees all over the world. It's about 500,000 a week. We are at our peak right now with what's going to happen. What'll happen here, as these defects get done, the number of global resources doing the development will drop off drastically in January. But right now, because we have the consultants and all the full developers trying to fix everything, it's fully staffed, and it's the highest it will be at any time in the project.
So it's about $70,000, $80,000 a day. That's right.
Thank you, Mr. Dunbar. Mr. Peterson?
Thank you, Madam Chair. And so, they're working 24/7 now, so they'll be ready to take a break over Christmas. Is that the plan, or?
So it's a good point there. We had initially planned a 2-week Christmas break, and the plan that's even there, that ain't happening. I can certainly tell you that.
We will have the function, for sure, the functional consultants, the Muni staff will not be working that week of Christmas break. It's just not probably the best. However, some of the global resources and/or if we are able to go into testing, we'll be working that week. The new modified schedule, which had a second week of Christmas break, that's not gonna happen. The new schedule, if it were to be released, is gonna showing most everybody's working now. They'll either be in testing, if we're positive at the end of next week, or they will be continuing to move on that particular number to be able to do it, but we will not be taking that second week off. But with the amount of people working, and by the way, the municipal staffs have been just tremendous during this entire process. They need that few days off as well to just have, rest.
Thank you,
Thank
Mr.
you.
Peterson. Please continue.
So the bottom half of that is the second major crisis, which goes to Mr. Trainee, your comments as well that we have had, which is data. That has been a struggle for us all along. We are actually, because of this, remember we had a 3-week delay to begin with, and then we've had this 4-week delay. They are absolutely on track to meet the 23rd on data. We will actually be ahead of the schedule on data based upon this extra 2 months. So this report shows 63 of the data files have been loaded. There are 10 more that are in process. They actually all relate to each other, and they don't want to move all of those because until the very last one, but they are committed. We are very confident that data will be ready by the 23rd, which has been kind of the thorn that we've had, but this additional 2 months that we've had since October, which was the original cause of us getting to this delay, is certainly there, and we're on track for meeting the data. Test scripts for Philo, which is kind of the third area. We were briefed on that. We didn't have a slide to be able to put into that. We're getting there. It's not where I would like it to be, but the one part about the test scripts are, for example, the Philo has 40 test scripts. And what we're talking about is taking a process from beginning to end and all the integration points that go along. They have all the critical ones already developed to begin testing. Some of the other ones that they can wait a week or two as they come in. So those are to kind of filter those in a little bit. You can't wait all the way through because you need to run them. But there's a priority listing of how you have to be able to run those 40, for example. All the critical ones have been completed, but not necessarily 100%. They are shooting for the 23rd. There might be a few of those that are delayed to the very end or will carry over. I'm not as concerned about that. The top part is we need a system to be able to go in and that is developed. That's the part that, in my opinion, we're going to be focused on, making sure that we're good on that one, and everything else will kind of follow along with that. Any questions on the slide deck? And then I'll add a few more comments.
I don't see any questions. So
Okay,
please continue.
so one of the requests that you have had on an ongoing basis is to kind of let you know what things might be coming up for your review in the future. So I do anticipate the next 6 to 8 weeks to see several things that are coming to ahead. We have a couple of contracts that need to be run through the assembly before the end of January that have to deal with our production environment, all those servers that are, when we go live, hopefully in July, we have to have that system set up for all those, the software to go on to. Well, they need a 4-month or 5-month lead time to install over 100 servers to be able to do that. So that contract has to come forward to the assembly, and there's also the support of all those servers and our system after go live. So we're actually, the good news is we're talking about after we've gone live, so that we're starting to talk now about the development, but actually having a system. So we are currently targeting the 24th assembly meeting to bring those forward. That's the current in January target. So there may be some work sessions or discussions leading up to that, but that is our target for that. The mayor is actively negotiating with SAP on some of our gaps that we have that have been developed where, and my belief is that what's going to happen is those will be kind of combined. So you might see some spending authority things and some funding things come forward at the exact same time as well that go along with that. And then actually just came up yesterday, and the mayor doesn't even necessarily know about this yet, but a prior purchase order, there was some things that happened in purchasing where we were a little short with regards to whether travel was going to be included. So we actually have to bring a request forward to the Assembly to increase the spending authority on a PO, and we actually have to request the funding for that particular amount as well. So we're trying to identify what it was, and it has to do with the fact that travel wasn't taken into consideration when those were funded. This was by the prior administration, but that just came up yesterday.
We have a couple of questions. Mr. Trainee?
Since my revenues coming in seems to be going down, what type of money are we talking about for these contracts? Approximately?
The two big contracts that I'm referring to were run through, they were a part of the budget process that you saw through in the October-November timeframe. Between 4 and 5 million, I think, is what the estimated amount of dollar amount would be on an annual basis. You understand that those contracts only are July through December, so roughly half of that would be a 2017 expense. But on an annual basis, you're looking between 4 and 5 million most likely.
Thank you.
Thank you, Mr. Trainee. Let me just follow up on this question. But the contracts that are coming before us on the 24th, aren't they, the money was already appropriated for those contracts?
Those two contracts were a part of the budget discussions
Right.
that you had.
I just wanted to make that clear.
There's-
Thank you. Mr. Dunbar?
You said that you're going to be installing 100 new servers or so?
Well, one of those contracts is what's called the HEC contract, and that's where we have the system is currently is in Santa Clara, California. That's where it resides, and they have installed actually hundreds of servers currently to do all the development side. All those servers stay in action, but you need an equivalent number of production servers. So that new contract that is going to be coming forward is going to be an inclusive one of all of those. The original contract for HEC last year just was for the development servers being built. Now we're getting to the stage where the system is getting, we can see the light at the end of the tunnel, and it's coming. We have to get ready to prepare for the actual go live server environment, and that's what's going to be coming forward.
Well, that was going to be my follow-up question. Perhaps you've already answered it, but where are those 100 servers, or however many? Where are they located? Are they in California? Do we ever anticipate a situation where the servers associated with this project will be installed in Anchorage?
Good question. They are in those new servers will be definitely in Santa Clara, California at this point in time. I believe the administration and the IT department is always looking at opportunities where we might be able to, one, be more efficient from a financial perspective, and two, you have a line that you have to run. So operationally, sometimes it's better to have them here than down there. However, those servers are very expensive, so to ever bring them in-house, you might be looking at a $5 to $10 million investment. Don't know if that's ever going to make sense, but potentially IT could be looking at GCI, some other local provider that might be willing to do that long term. And I know they're in the process of evaluating that, but at this point in time, given our time frames, this is the environment that we have. But we are always looking for lower cost things. But the other, I will say that you don't want to move right away, because the stability of this system, which is going to take several months and or even a couple of years after you go live, changing and installing 200 or 300 new servers with a new vendor and then moving it over might cause additional problems we don't really want to have to take into consideration.
Thank you, Mr. Dunbar. Mr. Peterson?
Thanks, Madam Chair. That was basically my question. We already had the cost of those servers included in the budget, so that's not going to be an additional expense.
Those particular contracts, the IT department put forward what they believe they were going to be needing from a funding for the second half of 2017 for both of those contracts.
Good, thank you.
Thank you, Mr. Peterson. Mr. Trainee?
Has IT looked at going with ASD on Fort Ridge? They've got a big computer system they put out there. It's got redundant power supplies. It's overcapacity. Have they looked at dealing with them to host this?
I would not know. That would be a Zoll question or Robert.
Mr. Harris?
Madam Chair, thank you, Mr. Trainee. To sort of follow up, so we have had a series of discussions with the Anchorage School District, as well as the state, UAA, about shared services opportunities, and one of them, of course, is talking with them about servers and whether or not we can make that work. That's certainly on our radar screen and something we'll continue to pursue. Whether it makes sense or not is, which is going to come down to the numbers. What kind of build out would we have to do? As you know, we have a data center of our own for the municipality, and so that's just a complex series of questions about which is going to be the best for us in terms of security and cost.
With merge services, we want to make sure we can join wherever it's possible, so I appreciate you looking at that.
Thank you, Mr. Trainee. Mr. Steele? Thank you. Please.
So those are kind of the heads up, but there's a lot coming forward over the next 6 weeks, and I'm sure we'll have several discussions and so forth as we go through this. So I do want to make you aware that expect a lot of SAP things coming forward.
Thank you. I don't see any other questions. Mr. Mayor, do you have a comment? Thank you.